months.
All right, that's the FMCG pack in focus. Prakash Diwan is now joining us on the show to take some questions. Prakash, great to have you on the program as always. Your thoughts, Prakash? I mean, this is a space which has been hurting because of a largely primarily rural slowdown. And we've heard it from companies themselves at the end of the last quarter. But is it getting to a point where one should look at this space constructively? Your sense?
Good afternoon, Prashant. So, we spoke about this a couple of weeks back when I was mentioning about all the, belt-tightening measures that companies undertook, particularly in Q1 of this financial year, and also, to a large extent, halfway through Q2, was essentially to override, all the pressures from some of the ancillary costs going up, not directly maybe raw material as much, but, the packaging costs, logistics costs, all of those. Now, that seems to be something which is actually eased off. Whereas they've already done measure, there's a huge amount of digitization that a lot of these companies have evolved themselves into at the dealer level, which is making a big difference where it doesn't hurt the dealer to kind of, order inventory at just-in-time basis or, something almost close to just-in-time basis. And all of that is actually translating into benefits or gains when things start normalizing. So when input costs start getting a bit more benign, you actually have all these measures throwing up much more better margins. And, the kind of commentary that's coming out of some of these MNC companies for their India businesses is talking about margin expansion. So that's great news after almost, 5 quarters of margin stagnation or erosion. And that's precisely what everybody is looking at. And, the other thing that really works, the tailwinds of market at all-time highs is something where you would need to look at hide under some sort of a safety net. FMCG still offers that, especially consumer staples. So I think it's, since pharma is not offering that flight to safety or IT is not doing that, probably FMCG was a pocket that was kind of undervalued. So that's where a lot of money is going in. But, this could probably be short-lived if the volumes don't deliver. But, so we'll have to wait. Festive season is anyways past, and we now have to look for money coming into the pockets of the rural consumers to really make a difference in terms of volume growth. So if the volume growths come up, and that will probably only get to know probably mid-Jan or something, then probably there could be some sort of a strength that could continue. There would be more legs to this rally. Otherwise, it probably is more of a corrective phase that these stock prices are reacting.
Okay, let's stick with, the FMCG sector. My colleague Shilpa Ranipeta got in touch with Sudhir Sitapati, the MD